It is 8:32, almost 8:33. You know, it's never too early to think about your taxes, especially now that there are updates to the tax code.
Yeah, we are joined by our financial expert, Jenny Groberg, to help us break it all down, give us some last-minute tax tips as we approach the end of this calendar year. Good morning, Jenny.
Hi, good morning. Thanks for having me.
So why is now a good time to start thinking about your taxes? What are some things you need to do?
You only have a couple of weeks to make some changes before the end of the year. And if you don't do it by December 31st, you can lose out on some really big tax savings. So I kind of just want to go through a few of those bullet points so that people can be watching for them, strategize, and make sure that they capture those before the end of the year.
Okay, excellent. Go through some of them if you don't mind.
Okay, so the first is to max out your retirement savings. Your 401ks, whatever, those really need to be maxed out by the end of the year. Now, the amount that you can contribute is $23,000, and that's filing singly. And then if you are over 50, you can contribute another $7,500. So if you have a Christmas bonus coming at the end of the year, if you have a little extra money, try to put as much as you can towards that 401k. That's going to be the best bang for your buck, and your best tax savings is within that 401k.
Okay, and what are some of the other things that we can do?
Okay, the second one is use your FSA funds. FSA funds are flexible savings accounts. It is use it or lose it. So you have to use it before the end of the year. Okay, so make sure you're doing that. The third thing is charitable giving. I know in the state of Utah, people give a lot of people give close to 10% of their income. I missed that lot in 2024. I, for some reason, thought I was all caught up. I missed about 2 or 3 months worth of payments. Come January, I missed a huge deduction. I paid it in January, but I missed that tax deduction. So that really hurt. So if you're planning to give to a charity, do it before tax time. Another thing you can consider is donating furniture, clothing, whatever. If you give it to a thrift store, however, you can't exaggerate the value of those items. So let me just break down what that looks like. If you donate a $2,000 couch, the amount that you can deduct on your itemized deduction for charitable giving is really the thrift store prices. So if couches at the thrift store are going for $100 or $200, that's what that deduction will look like. Okay, if you donate a $200 coat, you're probably looking at a $15 to $20 deduction.
Yeah,
so
and the IRS will pick up on that pretty fast, right?
Yes. Yes. You have to be careful. I mean, that's why Utah doesn't flag an audit when people are giving 10% of their income. But you just have to be wise, keep records, keep itemized lists of what you donate so that you have record of it.
I want to go back. I want to ask you one more question about the 401k, trying to max out that contribution. For a lot of people, it's a basic reasoning, but explain to people why that helps in their taxes next year.
Why it helps
reduce
this year or next year?
For next year, when you file your taxes.
So when you file for 2025, it's a tax savings. So if you donate or if you contribute $23,000 pre-tax to your 401k, you're not paying taxes on that.
Right.
So then that money is in a retirement savings vehicle, an investment vehicle that will grow, and then you're gaining money that wasn't taxed to begin with, which is a huge advantage.
Okay. And then, of course, your mortgage, you have, I guess, an interest deduction on that as well, right?
Yep, you can deduct your interest. Another thing is the 529 college savings plan. I've done another ARC segment on college savings plans.
Yeah.
So, if you want to look at that, you can look that up on YouTube if you're not sure what that savings plan means. But you can contribute before December 31st and also get a state tax credit, which is helpful. If grandparents or family members want a deduction, they can get that tax credit if they contribute towards grandchildren's savings accounts. So that's another thing to consider. And health savings accounts. Health savings accounts are the best. They're often called the triple tax advantage because you can use pre-tax money to fund them. They can grow tax deferred, and then you can even withdraw them tax-free. So what that looks like is if you have a high deductible insurance plan and your employer offers the HSA, you can be contributing pre-tax money to that. You can use it for braces, medical, Band-Aids, whatever. But then if you don't use the full amount, you can invest it, which is a pretty big deal.
So Jenny, I want to ask you about the One Big Beautiful Bill as well. Did it make any changes to the tax code that people need to be aware of?
Okay, there are a lot of changes. I did a free webinar with Forbes in October, and we kind of went through all the myths with the One Big Beautiful Bill. I'm going to be doing a follow-up webinar with Forbes this coming Wednesday. I had a lot of tax professionals sign up for it, a lot of CPAs. If you're unsure of what this tax code looks like, I would encourage you to register for the webinar. You can register, the information is on my Instagram at the Jenny Groberg. But there's so much red tape and fine detail here that people don't understand. They think, oh, with the One Big Beautiful Bill, I can go buy a car and I can fully deduct that. That's not the case. It has to be a new vehicle. It has to be assembled in the United States. You can only deduct the interest. So if people think they're just going to go buy a $50,000 car and fully deduct it, that's not the case. Okay. So you don't want to go spend, 90 cents to save 10 cents. There's a lot of things that people need to understand. So we'll kind of go through all of those things. Another thing for businesses is there is no entertainment deduction. I have a lot of clients that think their jazz tickets, their show tickets, they can deduct it, their golf, country club fees, you can't deduct that.
Okay.
Yeah.
But here's the deal. We can classify it in a way that could still get you the deduction. Let's say instead of just buying tickets, perhaps you sponsor a team and then you get tickets in turn. So it could be a marketing expense. So classification of these is really key for a business.
Okay.
You've got to make sure your books are clean, double check mileage, double check W-9s. You've got to make sure all this is done before the end of the year.
Yeah, just a lot of stuff to consider. So it's a good time maybe to talk with an expert too, like you.
Yeah, give me a call. I can walk you through that on the personal side or the business side. I'd love to.
Okay.
All right, Jenny, thank you so much. We appreciate it.
Okay, thank you. Appreciate it.
And we'll see you.